Presentation of cash flow. The cash flow statement shall report cash flows during the period classified by operating, investing, and financing activities. Operating activities. The amount of cash flows arising from operating activities is a key indicator of the extent to which the operations of the entity have generated sufficient cash flows to repay loans, maintain the operating capability of the entity, pay dividends, and make new investments without recourse to external sources of financing. Information about the specific components of historical operating cash flows is useful, in conjunction with other information, in forecasting future operating cash flows. Examples: cash receipts from the sale of goods and the rendering of services. Cash receipts from royalties, fees, commissions and other revenue. Cash payments to suppliers for goods and services. Cash payments to and on behalf of employees. Cash receipts and cash payments of an insurance entity for premiums and claims, annuities and other policy benefits. Cash payments or refunds of income taxes unless they can be specifically identified with financing and investing activities, and g. Cash receipts and payments from contracts held for dealing or trading purposes. Investing activities. The separate disclosure of cash flows arising from investing activities is important because the cash flows represent the extent to which expenditures have been made for resources intended to generate future income and cash flows. Examples: cash payments to acquire property, plant and equipment, intangibles and other long-term assets. These payments include those relating to capitalized development costs and self-constructed property, plant and equipment. Cash receipts from sales of property, plant and equipment, intangibles and other long-term assets. Cash payments to acquire equity or debt instruments of other entities and interests in joint ventures, other than payments for those instruments considered to be cash equivalents or those held for dealing or trading purposes. Cash receipts from sales of equity or debt instruments of other entities and interests in joint ventures, other than receipts for those instruments considered to be cash equivalents and those held for dealing or trading purposes. Cash advances and loans made to other parties, other than advances and loans made by a financial institution. Cash receipts from the repayment of advances and loans made to other parties, other than advances and loans of a financial institution. Cash payments for futures contracts, forward contracts, option contracts and swap contracts except when the contracts are held for dealing or trading purposes, or the payments are classified as financing activities, and cash receipts from futures contracts, forward contracts, option contracts and swap contracts except when the contracts are held for dealing or trading purposes, or the receipts are classified as financing activities. Financing activities. The separate disclosure of cash flows arising from financing activities is important because it is useful in predicting claims on future cash flows by providers of capital to the entity. Examples: cash proceeds from issuing shares or other equity instruments. Cash payments to owners to acquire or redeem the entity's shares. Cash proceeds from issuing debentures, loans, notes, bonds, mortgages and other short or long-term borrowings. Cash repayments of amounts borrowed, and cash payments by a lessee for the reduction of the outstanding liability relating to a finance lease.